So when the economy decides to shake, naturally, that's when most people decide to panic. But what if the very storm that terrifies the masses is actually going to be your greatest opportunity to build long-lasting wealth? And what if I told you that 80% of your financial success could be achieved not in these times of prosperity, but during these moments of intense crisis? Now, we all know that in every crisis lies the potential for success, and the difference between those who sink and those who swim is really down to a few simple but powerful steps. Now, by following these powerful steps, you can turn your financial turmoil into a launching pad for investment success, ensuring that no matter how tough the economy gets, you're going to be poised to achieve 80% of your financial goals. So the question then becomes, are you going to be able to hold the line and to stay the course? So welcome back to the Personal Finance Crew. And if this is your first time, a very warm welcome to the Economies channel, where together we're going to be learning the language of money and wealth. And we're also focused and dedicated to mastering money and making financial wisdom available to absolutely everybody. So are you ready to turn a crisis into a catalyst for growth? I'll see you in a minute. So in times of financial turmoil, many investors and individuals as well tend to turn to panic, and they lose sight of the much bigger picture. Now, economic downturns, recessions, and market volatility often trigger a knee-jerk response, leading to impulsive decisions and a lot of lost opportunities. However, history has always taught us that crises don't just breed risk, they also present opportunities for those who know how to act. So success, particularly during uncertain times, is not about predicting the future, but rather about preparing for it. So if you want to navigate through a turbulent economic waters and come out stronger, well, here's a secret for you. 80% of your success can be achieved by following a few key principles that are going to keep you grounded, focused and ready to act. But before we get into this video, as always, I'm going to pop up the usual disclaimer to say that this video is for education and for entertainment purposes only and shouldn't be misconstrued or misunderstood as offering financial advice. So here are the 7 essential steps that will not only help you survive financially, but also be able to turn a crisis into an opportunity to ensure that 80% of your financial goals are met in any economic environment. So number 1, know why you're investing in the first place. So understanding why you're investing is one of the most important pillars and the key foundation of everything that you do. Now, are you building for wealth in retirement? Are you saving for a home? Or are you trying to help your children get a good start, or even perhaps helping them on the property ladder? The key point here is when you're clear on your why, everything becomes much easier to stick to a plan, especially when crisis hits. And that's because without a solid understanding of your purpose, you're more likely to react emotionally, especially when the going gets tough and things become more difficult. Those who know their investment objectives remain focused and disciplined, and they view downturns as a temporary storm rather than a sinking ship. Now that reminds me of a quote from the famous Vivian Green, and she was an American writer and an artist, and she went on to say that life isn't about waiting for the storm to pass, but it's about learning how to dance in the rain. Now, this mentality is going to help you make far more rational decisions, which are essential for achieving 80% of your long-term financial goals. So number 2, let's start with a structured plan. Now, the cornerstone for a long-term success is a very well thought out plan. Now, without one, even the best intentions and your instincts can certainly get swept away in the sea of market noise and a lot of uncertainty. Now that's similar to what we're all being subjected to right now in advance of the budget on the 30th of October. Now, in a financial crisis, a structured plan is more critical than ever, as it serves as a sort of roadmap guiding your decisions and preventing you from making any knee-jerk reactions. Now, your plan should be broken down into short-term, medium-term and long-term objectives. And this is going to allow you to assess your progress and make adjustments along the way to make sure you stay on course no matter how rocky the markets become. So number 3, diversification. Now, I've talked about this in previous videos, but the saying, don't put all your eggs in one basket, perhaps has never been more relevant than during an economic downturn. Now, diversification is your shield against market volatility. What that means is while one sector or asset class may falter, others may remain stable or even grow, offering you a buffer against potential losses, and obviously this can lower potentially your overall risk exposure too. So spreading your investments across a range of asset classes such as stocks and shares, bonds, real estate, commodities, cash, and even alternatives, each asset class will respond differently to economic changes, meaning a well-diversified portfolio is going to help you ride out any market downturns far more smoothly. Now, this is going to ensure that you stay on track towards your 80% success rate, even when individual investments experience short-term falls. Now, if you are finding value in this video, please hit the like button and subscribe to the channel. We've got more and more viewers returning to the channel than ever before, but we've still got 90% of the people who watch the video who don't subscribe. So please can you also hit the notification bell to make sure that you see each video which is released on Saturday at 5 o'clock in the afternoon, and that's also going to help us massively to reach a wider audience. So number 4, prioritize low cost but high quality investments. So in times of crisis, expenses can quickly eat into your financial returns. Now, high cost investments can erode your gains at a time when you most need them. So to achieve financial success in any economic conditions, you need to prioritize low cost investments like global index funds, maybe some ETFs, and they both offer a broad market exposure with minimal fees. By lowering your costs, it means more of your returns are going to stay in your pocket, helping you to build wealth consistently over time. Now, during a financial crisis, focusing on keeping your expenses low, as well as your investments, keeping them as simple as possible, is a very highly effective strategy for maintaining your momentum as you move forward towards your goals. So number 5, controlling your emotions and your behavior. Now, one of the greatest challenges during a financial crisis or times of volatility is to control your emotions. It's very easy to let fear and greed drive your decisions, but doing so can lead to very costly mistakes. For instance, many investors panic during market crashes and they sell their investments at the worst possible time, only to miss out on the recovery when the market rebounds. Your hands up? Yeah, we've all been there. Now, to avoid these emotional pitfalls, you need to have a mindset of both patience as well as discipline. Now, remember, downturns are only temporary, but your investment strategy should always be focused on the very long term. It's also worth pointing out at this point that stock markets rise 76% of the time. So that means they are up 7 years out of 10. When you stick to your structured plan, you need to review your goals and avoid reacting impulsively to any market news or noise. You need to stay calm, stay rational, stay focused, and this is going to help you navigate the crisis with less stress, but with far greater success. So number 6, maintaining a high balance for flexibility. Now, in a volatile market, liquidity can be a very powerful tool. Now, having a higher cash balance during periods of economic uncertainty is going to allow you to take advantage of any emerging opportunities as they arise. What that means is when others are selling assets at a discount due to panicking, you can then have cash on hand to make timely investments, and that can significantly improve your portfolio's overall performance. So a higher cash balance naturally is also going to provide you with more peace of mind, ensuring you've got the cash on hand to handle any unexpected expenses. Now, this flexibility is key to maintaining a stable, long-term strategy, especially during times of crisis. And lastly, number 7, you need to regularly review and adjust your risk. So finally, Achieving 80% of financial success during a crisis requires regularly reviewing and adjusting your risk exposure. What this means is, as market conditions change, you too should be able to change and to manage your risk tolerance. What worked during a booming market may no longer make sense in a downturn, and you may need to adjust or to trim or to change your asset allocation accordingly. Now, this doesn't mean, of course, abandoning your strategy, but rather refining it and tweaking it to ensure that you're not overexposed to any high risk assets that could severely impact your financial future. So what you need to do is conduct periodic reviews of your portfolio and reassess your risk to allow you to stay nimble, proactive, flexible, and adaptable. Now, in this way, you're not only going to be able to protect your wealth during turbulent times, but you're also going to be able to set yourself up for success, especially when the markets start to rebound and to recover. So, in conclusion, a financial crisis can feel, and it does feel, like a storm that's impossible to weather. But with the right approach, it can become an opportunity for growth. And by following these 7 simple but powerful steps, such as creating a financial plan, understanding your why, diversification, controlling your costs, managing your emotions, which is the hardest of all, maintaining liquidity, and adjusting your risk as necessary, you're going to be able to achieve 80% of your financial success regardless of economic or market conditions. Now, I've recommended a further 2 videos in this series covering the dilemma of whether to save or to spend, especially in the early years of your retirement. And if you do decide to spend, there is a video called Drawdown for Dummies, and that's going to be able to explain how to take money out of your pension in the most efficient way. Thank you for watching for the very end and bearing with the very windy conditions we've got at the moment. Thank you for your time and for your patience as always. I'm going to see you all again next week.